So you're thinking about moving to Navarre, Florida, or maybe the military told you that you're moving to Hurlburt Field or Eglin Air Force Base, and you start looking around and you find Navarre. Well, Navarre used to be called Florida's best kept secret, but they changed that slogan, and now it's called Florida's most relaxing place. And when you look at the A-rated schools, white sandy beaches, proximity to the Air Force bases, it looks like a great place to live. And here's the thing, most realtors will just show you houses, tell you what you want to hear. But in this video, I'm going to tell you what you need to hear, the ins and outs, the pluses, the minuses, everything about buying a home in Florida, and specifically Navarre and Navarre Beach, Florida. Buying in Florida is fundamentally different than most places in the United States, and that's because of the long amount of coastlines that we have and the susceptibility to the storms and hurricanes that come with that. Today, we're covering everything. We're going to talk about Florida's market. We're going to talk about the insurance rates in Navarre, Florida. We are going to talk about inspections. We're going to talk about wetlands. We're going to cover anything that you need to know to buy a house in 2026 in Navarre, Florida. Here we go. All right, guys, first, just want to remind you, my name is Caleb Drake, and I'm with the B. Moore Group at Levin Rinke Realty, and we're realtors in the Navarre area. We're here to help you buy a house. At the B. Moore Group, we strive to be more than just agents. We want to educate our buyers and make sure that our buyers, both military and non-military, are making the right decisions before they move to Navarre, Florida, or anywhere else on the Emerald Coast. All right, guys, let's start by breaking down Florida and why it's different than most markets in the United States. Everybody knows that Florida is susceptible to hurricanes, and that changes the market tremendously here. And what that means is that our insurance rates are different, our inspection requirements are different, and building codes here are way more strict than most areas in the United States. But what does that mean for you? Well, let's talk about it. So Florida has over 1,300 miles of coastline, and with that coastline comes a lot of risk. Obviously, Florida is a peninsula, and we've got the warm waters of the Atlantic and the warm waters of the Gulf. And so anywhere from like June to November, we are susceptible to hurricanes. And with those hurricanes comes the increase in insurance rates and a very stringent building code. So what does that mean for you? That means that a $350,000 house in Ohio is going to have a completely different monthly mortgage than a house here in Florida, because your insurance rates are going to be way higher and property taxes may be more as well. But that's what we're going to break down today. So first, we're going to talk about insurance and why it's so high in the state of Florida. All right, guys, I'm not going to lie to you. Florida insurance rates are ridiculous. They're going up year over year. Since I moved here in 2014, I bought my first house in 2016, and I've seen insurance rates skyrocket since then. I moved from Navarre, Florida to Gulf Breeze, and when I did, I built my house, and my rates actually went down even though I built a home on the water. But when we talk about rates, I'll kind of tell you why that is here in a minute. So when we start talking about insurance rates, the national average is around $2,200 a year for insurance. Florida is around $5,400 a year for the average insurance. And when you get into the coastal, like South Florida, it goes up to $10,000 to $15,000 per year just for insurance. The highest I've seen here was a policy that was written for $15,000, but that was on a house that was water view in Gulf Breeze that was very susceptible to hurricanes, and it was a very expensive house. So you're talking like a $1.2 million home, and the rate was around $15,000 a year just for homeowners insurance, and about another $4,000 for the flood insurance. Crazy. It's crazy. But some good news, 2025 was a quiet year for hurricanes, so we're actually seeing rates decrease slightly. I say that with optimism. I'm not sure that they're going to continue to go down, but hopefully we continue to see the rates drop to at least an affordable rate that makes sense for everybody. So here, let's hope that we don't have any hurricanes in 2026 and we can continue that trend, decreasing interest rates and decreasing mortgage rates to help buyers have more buying power in 2026. And between Q4 of 2022 and 2024, rates went up like 34% across the state of Florida. But 2025 has been a turning point. So we saw rates decrease 0.7% to 5.6%, depending on the source that you look at. And we're still seeing that trend of dropping insurance rates with more carriers entering the Florida market. That was a big deal after, the busy few hurricane seasons from 2022 to 2024. A lot of insurance carriers left our market. When you don't have a supply and demand stays the same, obviously rates are going to increase. And as we go into 2026, Citizens has said that they're going to drop an average rate of 2.6%, and they're continuing to push homeowners from Citizens over to private carriers as they enter the market. So what does that mean to you? If you're already a homeowner in Florida, I think you should probably shop around for insurance, because some owners are seeing a 20 to even 50% drop in the rates from their previous carriers. All right, next, we're going to talk about why insurance is a little bit different here. We've talked about the hurricanes, but let's kind of break down why it's different and why it matters to you when you're buying in Navarre, Florida, or really anywhere in the Florida Panhandle. So insurance here, you have a homeowner's insurance, and then you have a wind policy. And then if you need it, if it's required, you have a flood policy. So your homeowner's insurance is going to cover like the standard stuff that you see in other markets, fire, theft, damage, hail, storms, all of those things, unless it's a named storm. So if it becomes a named storm, like Hurricane Sally was in 2020, then your wind policy kicks in. And the thing about wind policies is those policies are written a little bit differently. They're written as a percentage deductible on the value of your home. So if you have a 3% deductible on a $300,000 home, you're looking at a $9,000 deductible. If you have a 5%, you're looking at a $15,000 deductible before insurance ever even kicks in. So if you have a $100,000 wind claim during a hurricane, you're only getting $85,000 of that $100,000 in damage. It sucks. So when you're budgeting for a home, think about that. You may need $25,000 accessible if you get hit by a hurricane. It's not great, but it's just a risk that we have here in Florida, and we have to continue trying to mitigate. Okay, so I've talked about Citizens Insurance a little bit, and I kind of brushed over what it is. So Citizens Insurance is a state-backed insurance policy, and they had around 1.4 million people in Florida on Citizens Insurance at one point, but they're slowly trying to push all of those homeowners back onto private carriers as they enter the market. So right now you're looking at around 950,000 people on Citizens, and Citizens Insurance is supposed to be like a last resort. So if you can't get a policy with a private carrier because your home's too old, or it has an old roof, something of those sorts, then Citizens is a policy that you may be able to pick up. The problem is you're going to pay for it. So bottom line, if you're buying in 2026, you're in a way better spot for insurance than those people that bought in 2022 or 2023. So let's just keep praying to the weather gods that a hurricane doesn't hit Florida in 2026, and we may see those rates continue to decline and more insurance carriers entering the market. Here's to hoping. So we've talked about homeowners insurance and wind insurance, but we haven't talked flood zones very much yet. And Navarre has a lot of flood zones and wetlands. So these are things that I think are very important to a new homeowner or a first-time buyer in Navarre. So if you're moving from out of state, really research flood zones or hop on a call with us, and we'll talk about the different flood zones and what that means for you if you're buying in this area. I'm going to break it down today, but we could talk about it a little bit more on a call. So flood insurance is going to be a different policy than your normal homeowner's insurance. If you have like a busted pipe or something like that in your home, your homeowner's insurance will cover it. But if it's rising water due to heavy rain or a hurricane, storm surge, something like that, then your flood insurance policy has to cover that, and not everybody has one. I recommend in the state of Florida just getting a policy, even if you're in an X-flood zone. So what does an X-flood zone mean? Well, an X-flood zone means that there's a 0.2% chance of flooding annually. And what they call that is a 1 in 500 year flood risk. And what that means is you're not required to have flood insurance if you have an X-flood zone, but I would recommend it in most cases. It's optional, but it's only between like $400 and $800 a year, depending on where you're at. And most of Navarre is in an X-flood zone. Next is Zone AE. Zone AE is a higher risk, and they call that the floodplain risk. And it's about 1% risk factor of flooding annually. So what does that mean for you? An AE flood zone requires flood insurance, even if you are on pilings and you're above the base elevation. The math looks like over a 30-year mortgage, you have about a 26% chance of flooding in an AE flood zone. That's why mortgage carriers require you to have it. And with that risk, increases your price. So you're looking at around $1,500 to $5,000 a year for AE flood insurance. It can go up if your home's like below the base flood level and the risk is higher, but the average that I've seen is around $1,500 to $5,000 annually in the Navarre and the kind of the entire Emerald Coast. So what kind of properties are in an AE flood zone? That's going to be properties that are going to be like, on the Santa Rosa Sound or maybe just off of Santa Rosa Sound. So you can see on the map, like the AE flood zone areas, they come in from the coastline, obviously, and then decrease as elevation increases into mainland Navarre. And next is VE. So you're looking at hazard area VE. And hazard area VE is very expensive. So VE is a 1% chance of flooding annually, plus a wave action of 3 feet. It's the highest risk for FEMA classification, and with that, you're going to pay for it. So flood insurance in a VE is obviously required, and it runs between like $3,000 and $7,000. It can go up higher than that, but again, that's kind of the price range that I've seen when we're pricing out VE policies. 3,000 I haven't really seen, but the data when I was pulling it, it said between 3,000 and 7,000. I think you budget for higher. So where are you gonna see VE? You're gonna see VE flood zones on Navarre Beach, mostly. And that's gonna be like on the Gulf side of Navarre Beach, you'll see a lot of VE due to the storm surge risk. But guys, I wanna be honest with you. If you're in Navarre, I've already said it a couple times, and you're even in a flood X zone, buy insurance. I personally had a bad experience in Navarre on my primary home, and that's actually why I became a realtor. So I moved down here from Indiana, and I didn't know what wetlands were. I bought a house that backed up to wetlands, and I didn't know that that was the case. Nobody told me, and therefore, I started having issues in heavy rains. I would see my backyard get really wet, and it was kind of sloshy. And then when we got over 20 inches of rain during Hurricane Sally, my backyard became a retention pond, and the front yard filled up, and I've got about 6 inches of water in the house. So it was about an $85,000 flood claim, and I was displaced for 6 months while we were repairing the home. During that time, I actually deployed, so my wife had to deal with a lot of the repairs and the remodel. It was a very difficult time for my family, and I said, I'm gonna become a realtor so that that never happens to anybody else. So when I got back from Afghanistan, I got my license and I started selling houses to make sure that nobody else had to go through the experience I did, because it sucked. Okay, so when we talk flood insurance, there are 2 different types of policies you can get. You can get the National Insurance Flood Program, which will cover you up to $250,000, and that's government backed. So you'll hear a lot of people call that FEMA insurance, but it's the National Flood Insurance Program that covers you in case of a flood. And then you have private options that have entered the market now. Sometimes they're cheaper than FEMA options, and they'll cover more than $250,000, but they are a little more stringent on their underwriting policies. So something to talk to your insurance agent about when you're going under contract is if you should get a FEMA policy or a private policy. But those are all things that we can help you with if you just use us as a realtor. My recommendation though, honestly, is get quotes from both the National Flood Program and private insurance, because you can compare the rates and you can compare what coverage you have and see what fits best for you and your family. Oh, and one more thing. With flood insurance, there's a 30-day wait period. So if you buy your policy, you have 30 days before that coverage starts. So just be cognizant of that. If you're buying in the middle of a hurricane season, you will be at risk. So when we're looking at properties, the first thing that I'm gonna look at is flood zones, all the FEMA maps, and I'm gonna start asking questions. Did the property ever flood? Has the neighbors ever flooded? Are there any insurance claims? These are all things that we're going to research for you so that we know that we're protecting you as the buyer. We're gonna look at things like elevation, drainage plans, storm drains that are adjacent to the property, and we're gonna start having those conversations about if there is a risk on that property. Another thing that you can do is get an elevation certificate. So in the state of Florida, you're required to have a survey on the property to close any type of a loan. But you can get an elevation certificate at the same time that you're getting a survey, and it may actually help your flood insurance rates. All right, just to recap, X flood zones, all of Navarre. AE is gonna be near the coast, and you're gonna be required to have insurance if you have a loan on the property. VE is gonna be your highest risk, and obviously you're required to have insurance there. Okay, so we kind of talked about hurricanes and the risk there, and that's gonna transcend into the next conversation. Why Florida has weird and different inspections than most areas in the United States. So, history lesson. So after Hurricane Andrew in 1992, which was a catastrophic hurricane, it showed a lot of flaws in Florida's building codes, and insurance companies started requiring specific inspections just to underwrite policies and insure homeowners in the state. That's where we got the 4-point inspection and the wind mitigation inspection, which we're gonna break down now. So in the state of Florida, you really have 4 inspections that you're going to do when you buy a home. First is gonna be your pest inspection, or your WDO, wood destroying organisms. So wood destroying organisms is going to cover things like wood rot, any like wood decaying fungus, and the big one is termites. So Florida has a lot of termites, and I recommend this inspection even if it's not required. So what do you do if we find termites? Well, we're going to have the home treated, obviously, and then we're going to make sure that it's not structural, and we're having anything repaired that is structural. So what does that mean for you? That means that we're going to negotiate that in the contract, that we're going to have that inspection, and we're going to request repairs. So honestly, with the WDO inspection, you probably will see some wood rot, and I just don't want that to scare you. The humidity down here is so high that a lot of homes will have like a minor amount of wood rot that needs repaired. One of the areas you see it a lot on is like the door jambs or around the bottom of garage doors. So it's not a make or break when it comes to buying a home, but it's something that we definitely want to have the inspection done to protect you. Okay, so next is the big one. This one is called a 4-point inspection. So a 4-point inspection is obviously going to check 4 different points of your home. It's going to check the age, condition, and type of your roof. It's going to check the age, condition, and type of wiring, also including the breaker panel. And then they're going to check the type and age and condition of your plumbing, and that includes your hot water heater. And then last, they're going to check the age and condition of your HVAC system. So why do 4-point inspections exist? We've talked about Hurricane Andrew. So during Hurricane Andrew, like the aftermath, they discovered that there were a ton of like old air conditioners that were rusted out. Roofs weren't up to code. So first, let's talk about the roof. So everybody has probably heard of a 30-year architectural shingle, which is just like your standard asphalt roof. Well, in Florida, insurance companies do not think the life of a roof is 30 years. So at about 15 years, they're requiring new roofs, or they're increasing your policy to a point where you might as well just put a new roof on to save the money. Even homes with metal roofs or the clay, like Spanish style roofs, insurance companies are getting very stringent on those as well. I recently sold a house in Destin, Florida that had the Spanish style like clay roof, and it was about 25 years old. The life on those roofs is around 50 years, but insurance started giving the new buyer flack about it, and we had to get an extra inspection just to prove that the roof was in good condition. So they looked at it from the 4-point, and then they required a roofer to come out and say that it was in good shape and did not need to be replaced. So again, half of its life, 25 years, they were requiring an additional inspection to make sure that the roof was in good condition, or they weren't going to insure it. What does that mean for you as a new buyer? Honestly, if we know that the roof is old on a house, we're gonna ask for it to be replaced prior to closing. A lot of listing agents are already prepping their owners prior to listing that the roof may need to be replaced. So we're gonna get the inspection, we're gonna give that inspection to our insurance brokers, and they're going to tell us what the policy will cover. And if it's going to be a problem, we're going to ask for a new roof. All right, second is the electrical. So they're checking things like breaker type, wiring type, any open junction boxes. Those are all things that the 4-point can be flagged for. I just looked at an inspection yesterday that there was one missing screw on the breaker box, and the insurance company would not underwrite a policy until that screw was replaced. That's how strict they can be in Florida, because they don't want to underwrite anything that's an additional risk, because they already have a huge risk in hurricanes. So what else are they checking? So they're checking wiring type and condition. What that means is if you have aluminum wiring or knob and tube wiring, you're not getting insurance in Florida right now. To replace that's around $10,000 to $15,000 depending on the size of the house. One good thing though is most of Navarre is way newer than when they were using those types of wiring. So we're not seeing those issues as much in the Navarre market like we do in Pensacola. All right, point number 3 is plumbing. Plumbing, they're going to look at the hot water heater age and condition. They're going to look at the type of plumbing and if there's any corrosion. And then they're going to look at the drainage system as well in some cases. Big things are going to be like polybutylene plumbing, which was used around like 1985 to the mid 90s. If you have that type of plumbing in your home, they're going to require it to be replaced. If you have galvanized pipes, those corrode from the inside, they're going to require that to be replaced, or they're going to increase your insurance premium to where you might as well replace it anyways. So they're going to check the condition and the age of the hot water heater as well. And I recently had a house that had corrosion on the pipe going into the hot water heater, and the insurance company required it to be replaced, even though the hot water heater was only like 3 years old. Okay, so last, they're going to check the HVAC system, and the condition and the age are very important. So the salt water in the air down here like really deteriorates HVAC systems really quickly, and the outside units take a lot of beatings with weather and all the salt in the air. So insurance companies are requiring us to get those inspected as well. And honestly, it's a good idea anyways, because HVAC systems are pretty expensive. You're looking at like $5,000 to $12,000 on average to replace, depending on the size of the unit and the location on the home. So what does that mean? How does that affect us? Well, if the HVAC system is over around 10 years old, a lot of insurance companies are requiring an extra inspection, or they're requiring it to be replaced. At 15 years, the HVAC is pretty much required to be replaced by insurance companies. So we're negotiating that in the sale of the home. All right, so the last inspection, this one's not required, but I recommend it for every homeowner, and that's the wind mitigation inspection. So wind mitigation inspections are actually give you credits back, and that's due to like what type of windows you have or hurricane clips on the home. If the home has been beefed up for hurricanes, the insurance companies are going to give you credits for those. So that's why I always recommend our homeowners get this inspection, because a $10,000 policy may turn into a $4,000 policy if you have the right wind mitigation. Okay, so we talked about the inspections you need. Now let's talk about the differences between like somewhere like New York or the Midwest. You do not need a radon inspection down here. You can get them, but I've actually never had a buyer request it. We do not have basement inspections. We do not have oil tank inspections, and we rarely have chimney inspections because most homes down here do not have chimneys. All right, guys, I wanted to interrupt this broadcast to remind you that we are realtors in the state of Florida. I run this channel with my teammate, Aaron Howard, and Aaron and I cover from Perdido Key, Pensacola area, all the way over to like Destin, Miramar Beach. So if you're looking to buy a home in this area, give us a call. If you are looking to buy west of Miramar Beach, we have tons of realtor partners that we can refer you out to. So hit us up at the phone number or at the email below. We'll hop on a Zoom call. We'll talk about the area and if Navarre is right for you. If Navarre is not right for you, we'll find the area that is right for you, and we'll make sure to get you into a home that's perfect for you. So give us a call, shoot us an email, text us, however you want to communicate, drop a comment below, and we'll find you. Just reach out in some way because we're here to help you. Okay, so we've broken down inspections and the reasons and hurricanes, etc. for Florida, right? But let's start to kind of dive into the specifics for Navarre and Navarre Beach. So there's 3 things I want to talk about. Flood zones and wetlands. I know I talked about them a lot already, but it's important. And then let's talk about Navarre Beach and the land lease and how that works. And then we'll talk about Holley by the Sea and the HOA that comes with it. Okay, so first to kind of break down wetlands a little bit deeper. So if you buy a piece of land to build and you find out that it has wetlands, you will not be able to build on that portion of the property. So what do I recommend there? Is you need to get a wetland study prior to closing. You don't necessarily need that on a home that's already been built, unless you buy a house with like a lot of land up in the Holley area. You may want to do a wetland survey just to see if the land that you're buying is wetlands or if it backs up to wetlands or any of that, because that will affect you if you ever want to either build onto your home or like even build a pole barn or something of that sort. You'll need to have those wetland surveys and kind of know what you're dealing with. But like I said, if you buy a lot and you buy a 100 by 200 foot lot, but then you find out that, 20% of that land is wetlands, you won't be able to build there. So you'll lose a lot of the area that you can build. And that's a big risk in Navarre. And next, so you can get permits, but those permits are going to take a lot of time and a lot of money. And you have to work with the Department of Environmental Protection in the state of Florida. And with those wetlands, we've already talked about it. I want to say it again. It increases your flood risk exponentially. All right, one that I didn't mention a minute ago, but I kind of want to talk about is the Navarre bear problem. I don't know if a lot of realtors will actually talk about this, but when I lived in Navarre, I actually experienced this problem a lot. So I think it's worth considering and it's worth talking about here, just so you're not surprised when you go out to your trash can and it's been toppled over, or like I did one day, went to take the trash out and there was a bear eating it. So Navarre has a lot of black bears, and that's because we built in an area where they've always lived, right? So Navarre has expanded exponentially over the last decade or two, and we've started to build in those bear habitats. So where I lived in a neighborhood called Sound Hammock, my neighborhood backed up to the woods, which, like I said, I found out were wetlands. And I actually had a mother bear and 2 cubs living in the woods behind my house. So sometimes they would just hang out in my backyard. Sometimes my neighbor would send me pictures of them sitting on their fence. She found them sitting on top of her Florida room once, which is kind of funny if you walk outside and there's a bear on your roof. But they had climbed up there to get to like some bird seed that she had put out for the bird feeder that ended up on the roof. I don't know how it happened. I just know there were bears on the roof. I had a bear walk about 20 feet from me in my front yard as I was getting into my truck. And it's just kind of a way of life, but it's definitely something that's worth mentioning if you're moving to Navarre. Okay, so one more thing that's kind of weird about Navarre is if you're buying on Navarre Beach, you actually don't own the land that your home is on. You're leasing that land from the government, and I'll explain why here. All right, so it all goes back to 1947. In 1947, the federal government gave the land that is now Navarre Beach and Pensacola Beach to Escambia County. In 1956, Escambia County sold it to Santa Rosa County for $100 per year on a 99-year lease, essentially giving it to Santa Rosa County to manage and to build on, with one condition, that they would build a bridge from Navarre to Navarre Beach. And they did in 1960. So in 1960, we got the causeway that goes from mainland Navarre all the way to Navarre Beach. Now, 2014, there's a Supreme Court ruling that all homeowners on Navarre Beach will pay full property taxes regardless if they own the land. Because before 2014, there were no property taxes on Navarre Beach. So what does that mean for you as a buyer? Well, you own the house, but you don't own the land. You're on a 99-year lease that's automatically renewable. Essentially, you are never going to outlive that lease, but you really don't own it. This is called a leasehold and not a fee simple ownership. So just keep that in mind when we're looking at homes on Navarre Beach. It will come up and there will be some addendums that come with it, but essentially it's a 99-year lease, automatically renewable. You're not going to lose the land underneath your house. So as a Navarre Beach owner, you pay a $250 a year lease and your property taxes. It does make getting a mortgage a little bit more difficult, so we have to make sure that the lender understands this and going into the mortgage process with that in mind. Most conventional lenders will finance on the beach, but there's just a couple of required addendums, like I said, that will come up in the closing process, so just be aware of that. So next I want to talk about Holley by the Sea. If you're familiar with Navarre, then you've probably heard of Holley by the Sea. Holley by the Sea is one of the biggest neighborhoods in the state of Florida, and it's the biggest neighborhood in Navarre. It comes with a lot of amenities, but a very strict HOA. HOA fees around $50 a month, but that gets you access to their community center with a pool, the boat ramps on the bay, and a ton of other amenities that come with being a Holley by the Sea resident. So Holley by the Sea prices, they may be a little bit different than some of the other neighborhoods. And that's because of the amenities that you get. The average price as of this video is around $520,000 in Holley by the Sea. There's multiple neighborhoods within Holley by the Sea, and some of those neighborhoods like Hidden Creek, they do not allow short-term rentals. So just make sure that when we're looking at properties, if they're in Holley by the Sea, that we're reading the HOA bylaws and the CC&Rs so that you understand the restrictions that come with living in that neighborhood. So what do we ask when we're looking at homes with an HOA? Okay, so when you're buying a home in an HOA, there's things that we need to consider and questions we need to ask. So first, we're obviously going to ask how much is the HOA per month? We're going to figure out what the HOA fees cover as far as amenities, or is it just an HOA? Do they just cover, writing you HOA violations? And then we're also going to look at the financial health of the HOA, because there are horror stories out there of HOAs not having any money and doing special assessments to get their books right. These are things that we need to look at when we're considering homes with an HOA. So we'll talk about that stuff when we get to that point. Okay, so let's just briefly talk about 2026 interest rates, kind of projections. And then if you're a military buyer, we're gonna talk about BAH rates and what you can afford in Navarre for your rank. Experts are predicting around a 6% interest rate for the beginning of 2026. So we're gonna talk about what that means for you as a buyer. So let's break down a $500,000 house at 10% down payment. So $500,000, 10% down payment of $50,000, you have a $450,000 loan. That's our baseline. Interest rate, we're gonna go with 6.2%. So we have what we call P&I and PITI. So the principal and interest on that loan are gonna be around $2,755 a month. Now we have to add in insurance and taxes. Homeowners insurance, we're gonna average around $650 a month, just on the high end. Flood insurance at around $200 a month, just assuming that it's an X-flood zone. Property taxes are gonna be between $325 to $475 a month, just based on what the assessment is, but we're just gonna estimate. And your HOA of $50 to $200 a month, depending on where you buy, probably closer to like the $50 a month in Navarre. When you add all of that up, you're looking at like a $4,000 to $4,500 a month payment. So you can tell that with interest rates and the cost of homeowners insurance and taxes in Florida, we're seeing a very high monthly payment. And I'm optimistic that in 2026, that might drop a little bit with interest rates and insurance starting to drop. Oh, and then there's that elephant in the room that DeSantis is saying that they're gonna get rid of property taxes in the state of Florida. I don't see it actually coming to fruition, but if it does, that's obviously going to drop your monthly payment a ton. Okay, so if you're not military, you can fast forward the next 5 to 6 minutes, or you can listen and learn. But for our military buyers, we're gonna talk about BAH rates and what that's going to do for your buying power in Navarre. If you are stationed at Eglin, you're looking at about an hour drive. If you're stationed in Hurlburt Field, you're looking at a 30 to 45 minute drive, depending on what part of Navarre you live in. If you're stationed at Duke or at Ranger Camp, it's going to be probably over an hour, maybe an hour and 15 minutes. I don't see a lot of buyers that live in Navarre that are stationed there. At the time of this video, 2026 rates actually just dropped, so we can talk about 2026 rates here. I'm gonna talk about E6, O1, and O5. If you're an E6, you're getting $2,623. If you're an O1, you're getting $2,420. If you're an O5, you're balling out at $3,482 a month for BAH. So can you buy this $500,000 home that we're talking about on your BAH rates? If you're an E6, it's gonna be challenging. Your BAH isn't going to cover the payment. It's gonna cover about 60% of it. So if you're a single income family, it's gonna be tough to buy a $500,000 home. If you're dual income and your spouse is also employed, or you have some type of a side business, you can most likely afford it, but it's really gonna depend on their income. And if you're an O1, it's the same thing's going to apply to you. But if you're an O5, the likelihood that you can cover that mortgage is going to be a lot easier because of your BAH rates. Your BAH rates will cover around 75% of the mortgage, but the original intent of BAH is to cover 95%. So you can see that rates haven't kept up with market conditions. So the reality here is, if you're buying a $500,000 home in Navarre, you're most likely an O4, O5, E7 through E9, or if you're an Army guy, you might be a chief warrant officer. So looking at the numbers, if you're an O1 or an E6, you're probably looking at more like the $325,000 to $400,000 range, and we can still find homes in Navarre at that price. We'll talk about VA loans on another video. Just know that VA loans are 0% down payment and no private mortgage insurance. So if you have money to put down on a property, then those numbers are actually going to change significantly. All right, guys, so we talked about the risks of hurricanes and how that affects insurance and inspections in Florida, and then we compared that to Navarre. Next, we're gonna talk really quickly about hurricane prep after you close on your home. So if you buy Navarre, you're obviously in hurricane country, so we'll talk evacuation zones first. Santa Rosa County has 5 evacuation zones labeled A through E. Zone A is the immediate coastline, and then Zone B steps in from there, and then C through E are all mainland areas. All right, so let's think about this. So if we're getting hit by a hurricane, the category of the hurricane is going to matter the most. So if it's a category 1 or 2, the likelihood of evacuation is lower. 3, 4, and 5 are evacuations, and 5 is most likely going to be a mandatory evacuation for most of the area. So if you're looking at a category 1 or 2 hurricane, then Zone A is going to be required to evacuate. If we have a category 3 hurricane coming, then most likely A, B, and sometimes C are going to be recommended to or required to evacuate. Category 4 and 5, those are major storms. You're going to be evacuating Navarre, Florida, regardless of what evacuation zone you're in. So this video's got a little bit longer than I expected, so we're not gonna go over like hurricane prep and all of that, but look for another video on how to prep your home for hurricanes during hurricane season. All right, so we've talked about all the hurricane inspections, everything regarding buying in Florida. Let's talk about, is 2026 a good time to buy? Caleb's opinion is yes, 2026 is a good time to buy, but here's why. First, interest rates are supposed to keep dropping. Second, insurance is finally stabilizing, and if we have another good year, then we may see rates drop significantly. With those things, you have buying power again. So you start to see rates drop, you start to see insurance rates drop, you can buy more house for the same amount of money per month. Next, you have negotiation power because prices and inventory are normalizing. So we're seeing an increase in listings with less buyers, and that's starting to make it easier to make aggressive offers and to get homes below asking. If not below asking, sellers are giving concessions, and we're seeing a lot of people buying down interest rates with seller concessions. So if we are able to negotiate a rate buy down on the purchase for your home, I think in 3 to 4 years, rates will be lower than they are now. So you'll be able to refinance into a lower house payment. All right, guys. Wrapping it up. I know this was a long video. Leave it in the comments if you don't like this length, if you want us to go a little bit shorter. But to wrap it up, right now is an incredible time to buy in Navarre, and Navarre is a great area. Whether you're military or not, the area is amazing. The beaches are phenomenal, and we're starting to get a lot more things to do in Navarre. So do I think Navarre is a great area to buy? I do. I told you why. I told you why 2026 is a good time to buy. And I gave you a little bit of education on your first time buying in Florida. With that, give us a call, shoot us a text if you're interested in buying. Like I said, we aim to be more than just agents at the Be More Group. And this channel, we're hoping to educate you and earn your business. So give us a call, shoot us a text. We'll hop on a Zoom call. We'll talk about the area. We'll do everything we can to earn your business and to find you the right home in Florida.